welcome back to Fintech Focus TV with me, Toby. I am absolutely delighted today to welcome back one of the stars of the 2020 series. We are revisiting some of the episodes we did back last year and also celebrating those companies in the Financial Technologist magazine's Most Influential Fintechs of 2021 awards. One of those is a company I think did a fantastic job over the last year. I'm looking forward to unpicking that a little bit again and seeing the plans for 2021. It is Tobias Sproehnle from Moorgate Benchmarks. Tobias, how are you?
I'm pretty good. How are you? It's a pleasure to be here.
It's great to have you back again. Looking well, looking like the beard's got that little bit longer again. I'm always impressed with that. and business seems to be going well as well for you.
Oh, absolutely. It's been a tremendous 2020. We had a fantastic end of 2020 and a fantastic start into 2021. So yeah, I think it's fair to say we used the crisis wisely. So really good.
Well done, well done. We'll unpick that in a minute, but not everyone. I know we had a lot of viewers of last year's show, but not everyone's going to have managed to have seen it last time out. So, give us before we get into the reads, let's have a little bit of a background on yourself and the company. Can you tell us a little bit more about Moorgate Benchmarks, please?
Yeah, absolutely. So my background personally is fixed income and derivatives. So I entered the wacky, wonderful world of indices in 2006, working for Market, helping Market develop the index business into what it is now. Left Market around 2014, and after a short stint working for FTSE and Thomson Reuters, I started Moorgate Benchmarks. What we're doing as Moorgate Benchmarks is we're designing, administering and calculating indices. So the idea behind Moorgate was that we really wanted to provide choice to both product structurers, but also to people who have index ideas and really helping these people bring these ideas to life. We think the current market structure is one which is very inflexible. So we're providing choice. Started off as a consulting company, helping buy side, sell side exchanges, but also completely new players in the index space, designing indices and dealing with the boring part of the administration, which you have to do in this day and age, post-LIBOR, where this is a highly regulated area. And we've really migrated or transformed the business over the last 18 months from a consulting company focusing on these two areas into a company really offering calculation as well. So we're working with, as I said, buy side, sell side exchanges, but also very exotic players. Our most exotic customer, for example, is Airbus, the aircraft manufacturer, where we help them developing and administering a series of indices which will be the underlying for passenger derivatives. So yeah, all in all, we continue on our path that we started as a consulting business, really empowering innovation in the indexing space.
I think it's fascinating. I've been speaking to a number of companies recently who've gone through that same journey. And I think that consulting element is a very interesting starting point, because there's a lot of companies that start there and then recognize the gaps in the market through that consulting journey, and then become a sort of product business that thereafter and turn into the sort of fintech. And look, this I guess the sort of feature of our conversation, I found it a massively inspiring conversation when we spoke at the back end of last year in 2020, and I loved. You know, the whole premise of this show has always been about seeing people turn the negative into a positive, and wanted to get people to transform their views of how it is easy to be very defensive and negative through what we've endured over the last year or so on a social basis, into seeing really where the opportunities are. And I think you absolutely embrace that. And that sort of journey from consulting to fintech, I think, and you've mentioned this before about using the time period wisely, benefit from the crisis, keeping the spirits up, keeping your mind straight and coming out stronger from this. That was always your sort of raison d'etre. That was your mantra coming into this, and it's been inspiring to see that sort of come through. Tell me a little bit about how that's allowed you to sort of completely, I guess, accelerate, reshape and position the company over that time period.
Yeah, I mean, there's two things here, right? One is when we started that crisis or when we went into that crisis mode more than 13 months ago now, we always said, okay, we're going to keep a straight mind. We're going to be positive, and we're going to come out stronger out of that crisis than we went in. No one envisaged that crisis to be that long, but we always said, okay, we're going to use this wisely. We were in a quite fortunate position to be fully capitalized, to really don't have that massive revenue pressure, and really being in a stage where we brought all the pieces of the puzzle together in the second and third quarter of 2020, and that's what we did, right? The crisis really allowed us to really focus and build what we wanted to build faster. There's another point which I wanted to touch on, which is the migration from a consulting company to the fintech company. Essentially, the main reason why we did that was because we listened to our customers. When designing indices for customers and when doing the administration of indices for customers, one of the questions that we always were asked was, can you also calculate these indices for us? And we had to pass on our customers to partners, and we weren't really blown away by the quality we got, the level of service we or our customers got, and the commercial model. And that's why we said, okay, let's build the technology that the market needs. So essentially, there's that one overarching goal. We want to build exactly what the market needs, and we really bring the experience. And I'm giving away my age and my partner's age when we're saying, well, we have 80 years of experience under our belt, and I
presume that's not each.
That's not each. That's three of us, me and my two co-founders. But where I'm going with this is really we've done a lot of mistakes ourselves, right? We've built a lot of businesses, or in the case of Mark, our CTO, we've built a lot of technology, and we know where the skeletons in the closet are, and we know where we made mistakes before. So we really were in that fortunate position beginning of 2020 to really get that step back, say, how would we do it if we start all over again? And that's what we did.
Fantastic. I love that. I think it's so important to see that sort of stuff coming through as well. So if we look at the year ahead and how the positions, or how the company sort of set itself up now for the future in the next sort of phase. 2019 was about you getting sort of late seed money. You're now starting to look at a Series A, which is very, very exciting, and sort of take the company onto the next journey. Tell me a little bit about that journey. How's that been, and what's that looked like for you so far?
Very, very interesting. So where we are with the company, we really used the funding which we got in 2019 to do that migration or that transformation that I described. We have all the building blocks of the technology up and running. We're getting significant traction from the tier one customers. We have an impressive range of customers which we're serving already, but we really want to get this to the next stage. So we really want to scale up, and that's why we decided to go and get a Series A funding. So we're only in the early stages of doing that, looking at strategic investors and at finance investors. And what I find particularly interesting is strategic investors where not only, well, we give them a fantastic opportunity to invest in a fantastic company, I have to say that, but where we're also solving problems for them, right? So there are a lot of companies out there who really need help on the indexing front, where we can come in and where we are interesting as a company where they invest in, but also as a partner that provides the technology they need.
I think that's the sort of utopian situation, isn't it? And I've been speaking to a number of companies who've been through, or just been through, or just sort of looking at their Series A as well at the moment, and that sort of piece there where you're getting this sort of trust from the company there to say, look, they want to get this right from an investment point of view. You're looking at a business there that you can be invested into, that allows you to get the best possible solution and guide the strategy of that suits you as well. I think it's really interesting about how companies can look at that strategically to build their business. I also think one of the things I've noticed specifically about this sort of Series A culture at the moment, because I think there's a lot of companies that are moving that. There's a lot of institutional money out there at the moment. There's a lot of ambition and appetite that makes, for me, 2021 likely to be one of the biggest years for fintech investment in the UK's seen for a long, long time. It's always been, relatively robust, but I think, I'm just hearing it left, right, and centre at the moment. Series A, Series B seems to be the sort of mot du jour of what's happening right now. One of the things I'm noticing is about how important it is to get the right investor and select your investors and that team correctly who come into it. Tell me a little bit about your due diligence in what you're looking for in an investor as well, because I think that's quite interesting.
We're really looking for a partner who's in it for the long term, right? And I don't really want to scare any VCs who are watching this away with that. It's not that we want to do this forever, but it's really a strong partner who can help progressing the business, right? And in 2019, we decided to go with ETF Securities Capital, a partner who helps us greatly on both using operational synergies and also strategic synergies, and we're in the same situation now, right? We're looking for a second partner. I think, and this will sound much more arrogant than it's meant to be, there's no shortage of people out there who are willing to invest and give us their money, but we're really looking at a partner who can really help us progress, right? Being that as a corporate VC, where we can, as I described earlier, really help bringing the product and their business forward, and them investing us, or this being a VC where we can have synergies within the portfolio. So it's not a scientific process that we're going through, but it's really we're looking at very closely what are the strategic effects of that entity investing in us, and it's almost more risks that we're looking at, right? The number of players out there where if we would decide to go with them, that would close doors, right? Either for future investment with peers in that space, or for customers, right? So we wouldn't really go down the route and engage with an investor, which would really prevent us from doing business in that space with competitors of that investor. So it's basically, to sum it up, the look and feel of that investor and the strategic angle that we have with a potential investor.
I think it's really interesting that you say that, and look, when you say it's non-scientific, I think there's probably a fair amount of common sense that comes into the decision making there about what makes a good partner for you. And look, there's always going to be a little bit of a touch and feel and what feels right, but it's also strategically what makes sense for you in the business as well. And as I say, when you've got a business that's good, there isn't going to be a shortage of people wanting to invest in the space at the moment. So it's just about making that right piece about where the expectations sit, I think, as well.
And that touch and feel is interesting, right? Because there's a lot of talk out there, and then people discuss about what do investors see when they, or what do they look at when they invest in a company in an early stage. And 4 out of 5 investors will tell you, well, we look at the people and we look at whether we like the people and whether they're likely to really implement what they say they plan to implement. In the stage where we are in, I think it's a two-way game, right? It's not only that investors are looking at us and seeing whether they like us. It's also that they have more and more databases to really value us. But it's also that we are looking very closely at investors. So a lot of people tell me that in the early seed stages, it's the beggars can't be choosers, right? You basically pick whatever you get
Friends and family,
as an entrepreneur. Exactly. That's why a lot of people end up with friends and family. But I think as you move on, you have more power on the investee side in a sense that we're looking closely at. Yeah, do we really like these guys? Can these guys really help us achieving our goals? So it's almost turning around a bit.
I think it sort of comes, I sort of hesitate to say scientific, but there's obviously a formula that investors are looking for when they're looking at companies and investing at Series A level. It's obviously, more so depending when you get to, how much you're looking to raise. They look at the management team, and you're talking there already about 80 years worth of experience and some good track records of your leadership team. They're looking at the size and scope and scale of the marketplace and how niche and the potential value of it there. And they're looking at the product and they're looking at the track record. Now, to me, it seems you've got a fairly strong set of boxes ticked in all of those sort of areas. So it makes it a very attractive proposition. Why do you feel that the Moorgate Benchmarks represents a great investment for people to be looking at the moment?
We're really bringing all these pieces of the puzzle together, and then you almost all my thunder by really touching on all of these things, right? What is important in that space, right? I think it's the background, it's the skill set and the network. No doubt we bring that together. We as a founding team really complement each other quite well. We have Gareth as the rocket scientist developing index ideas, really one of the legends in that space, one of the 4 people who founded FTSE 28 years ago. You have Mark, who is one of the very few people in the industry who built a technology and ran a global operation. So his background is he built markets index technology and then sold that technology to market and stayed on the COO for the index business for 4 years. So you have not a lot of people out there with the skill set he brings, and then it's me bringing it all together and running the show. So we complement each other quite well and really have the skill set and the know-how that's necessary. But that's only one part of the puzzle. The second part is really the technology. Touched on it, but we really built a technology which is very powerful and which is really standing out in the industry out there. We've been in that very comfortable situation to really make that step back, to really just having closed a funding round and saying, okay, what technology does the market need? Where's the market going with mass customization and direct indexing and all these trends? We said, what do we need? And it was quite an eye-opening experience, I have to say, because very often we came to the point where we said, why on earth is the industry doing it like that? And we didn't have an answer. Well, the only answer we had was, well, because the technology they're using isn't up to scratch. So we basically changing that. So we built a very, very powerful, scalable, flexible index engine, which can all the things, which does all the things that you would do if you start from scratch. And then it's really the traction that we already got. Here we are, early 2021. If I look back at our plans in 2019, we've really smashed all our plans. So we initially thought we started the more exotic parts of the business, smaller players, but we're right there in the middle. People really need our technology, and we're proving that we can deliver.
Yeah, I think that's so important, isn't it? It's having solving a problem that needs solving, which is one of the core things. And if we look at actually what investors want, and actually the criteria for the golden thread that exists through all of the companies who are listed in this year's Financial Technologist, be out on March the 29th, and you'll see a number of brilliant companies who've defied the odds over the last year and really maximized this period. They've been able to maximize this period by having strong teams, by having technology that solves problems that needs to be solved, by having a really strong and robust plan, to be agile in where they're looking at, to be innovative in their approach. And I think that makes it a very strong proposition, which is why I think you will see a number of companies who are listed on this year's listing, who will either be just having raised cash, or just be in the process of doing it, or just be on the verge of having something very exciting happening in their business. So I'm really excited to put that list out there, and also to have you guys in it, because I think you're the epitome to me of what's made a company do well over the last year, and certainly set the foundations for what's ahead. Which links me perfectly into the next sort of phase, which is looking ahead, looking at 2021, and looking at the wider trends in the marketplace. I know there's a lot of talk about direct indexing at the moment. That's a rabbit hole you can talk about for a long time. I know.
Don't get me started.
I'm gonna throw it out there and allow you to grab it. Tell me a little bit about your thoughts on where the industry as a whole heads this year, and some of the trends we can expect to see.
Yeah, absolutely. I think we touched a bit on it when we spoke last year, but what we're continuing to see is really a paradigm shift in the industry, away from this being an IP and a trademark play to this being becoming a data and technology play, where up until 5 to 10 years ago, trademark was really important for people using indices. That is slowly but surely going away, and the players who will focus on building great technology and great data will continue to win. There's a second trend, which is mass customization, or direct indexing, as people call it. And we've built our technology from day one, always with having this in mind, that we need to build a technology which is 100% flexible, but 100% scalable, right? What we're seeing at the moment is another paradigm shift, and that's a lot of that is driven by ESG, where our kids' generation more and more will look into where does their money go. We think our generation, well, you and my generation, think we're quite smart when we invest in ETFs and when we pick the right ETFs. I think our kids' generation will be completely different, right? I mean, they will be on their smartphone. They will be very exactly looking at where's their money going, right? And if I look at my 17-year-old son, he's swiping, in his ideal world, he wants to swipe left and right, not only in Tinder, but also when he comes to his investments, right? Swiping left in terms of, I want to get exposure to North American equities. Swiping right, I don't really want to have exposure to coal or oil stocks, and so on and so forth. So we think the future is mass customization. And direct indexing is the first phenomenon in that vision, right? Where at the moment high net worth individuals can really slice and dice indices and can be very particular on what do I want to have in there, and what don't I want to have in there. So we sit in the middle, right? We have this powerful index and portfolio calculation engine, which will be the backbone for direct indexing. And it's not really clear where direct indexing is going, whether that indeed will be a play which really will trickle down from the high net worth individuals all the way to the mass market. The jury is still out, but we're really positioning Moorgate in a way that we can be the engine, if that is the first step into mass customization.
Very, very exciting. And look, you guys have spoken to, and sort of, I think we've spoken about this in the past. You're an enabler for innovation, and innovation is very much at the core of the business philosophy and what you do as a company. Let's finish off by talking about the business itself, Moorgate Benchmarks itself, and what's ahead for the year. Talk to me about some of the innovation you're expecting. Talk about some of the exciting things. Obviously, the fundraising is at the very heart of that. But what can we expect to see, and what's exciting for the company over the course of the next year?
What's absolutely exciting for us is two things, right? We continue to help people innovate. What does that mean? It's basically ETF providers, it's exchanges, it's asset managers who have exciting ideas, and we help them, bringing them to life, right? With our powerful technology at fair prices. So we have a lot of exciting customers in the pipeline at the moment. So you will see us powering a lot of exciting ideas. On the technology side, we're more and more really speaking to big players who don't really have the technology they need in order to get ready for future or be ready for the future. So we're more and more having discussions where we are the backbone for big institutions, where we really providing the technology for big institutions. So all very, very exciting, and that in addition to continue to build all the exciting stuff that we want to build on the technology. Look, we've made great progress on the operation side and getting all the operations bits and pieces together. We're now not only regulated by the FCA in the UK, we're also regulated by BaFin in Germany, because it's only half the fun to deal with one regulator. We're now regulated by two, and all these really puzzle parts which we continue to bring together. But 2021 is really going to be an exciting year for us, because that's the year where we really take off, right? And it's quite nice from a personal point of view, because it coincides with what we all feel at the hopefully end of lockdown version 3, where I'm looking out in the garden. It's a sunny day, and it feels like we're at the end of the tunnel, and it's quite nice to really see that coinciding with Moorgate taking off fully.
Tobias, listen, absolutely. Last time we spoke, I remember coming off that call and being super excited about and inspired about the positivity that you were showing at that stage, and even more difficult sort of stage as we come into springtime now, with as you say, the sun shining and everything looking a little bit brighter. Vaccinations, increasing in speed, and everyone sort of genuinely sensing that sort of optimism and positivity that I think is sort of surging back into the industry. Plus the sort of cold spring of the economy, as I love talking about all the time, that people expect to see through this summer, and a robust industry that I think is just getting started in terms of a swathe of digital innovation that looks very exciting. This to me is why I love working in this space. I love talking to people like you, and I think it's massively energizing, and I wish you and the team nothing than what I expect, and more than what I expect, which is an absolutely stellar year again in 2021. So Tobias, it is always a pleasure. I love talking to you. I love hearing about the business, and I wish you the very, very best of luck with that Series A, and I'm sure you're going to smash it out of the park. So it's a pleasure having you on the show again, sir.
Thanks for having me. It was a pleasure for me as well, and looking forward to speak soon.
Good man. Thank you very much, and thank you all for watching. We'll see you soon on another episode of Fintech Focus TV. Thanks a lot.